Okay.
Okay, just a moment on my side here. Okay, so good morning. It is Thursday, January 28th, 8:30 a.m. And this is a meeting of the Senate Natural Resources and Energy Committee. We are continuing our work on weatherization today. And we're starting off with some guests that I've alluded to in the past. You know, I've been saying that since the summer, I've been working with a team of people, and that team has grown steadily larger. The work here on weatherization, this committee has been working on weatherization for years. We've done a series of steps through a series of bills. In a parallel universe, we've been fortunate that Mr. Lunderville has also had a long-term interest in seeing Vermont pick up weatherization in terms of its scale. And a conversation with him this summer was what became the seed around this team form. And so I really want to thank especially Mr. Lunderville, Mr. Barton, and Ms. Collins for coming in. You know, I say this probably to the committee's annoyance by now, but the citizens legislature to me means all the citizens of the state of Vermont. We do better work when people from outside come in and help us learn and do improve the work we're doing. So we've heard since the PUC delivered after 2 years of work, brought a report back to us last Friday. And I'd say the two key findings were that there was irrefutable proof that weatherization was in the state's long-term interests. And the second thing they said was we also needed robust long-term funding to do that work. So today we're going to talk about, and I think funding in this case is plural. We're not looking for a silver bullet. We're looking for different streams of income that when combined together, sort of like plying threads or something, end up making a stronger program. So with that, I wanted to talk about some exciting developments that relate to the governor's proposal that relate to weatherization and other funding ideas. So it's a real pleasure to welcome you all to the committee. And I figure the next hour and a half is yours. So we've got plenty of time for presentations and discussion. And I'll ask you to manage yourselves how much time and switch back and forth. We can do this fluidly. So thank you again for coming in.
Well, thank you very much, Senator Bray. And it is a real pleasure to be with you. And it's a real pleasure to have been working with you as part of this team for many months now. For the record, my name is Neil Lunderville. I'm the President and CEO of VGS, Vermont Gas. Joined today by Maura Collins, the Executive Director of VHFA, and Bob Barton, an energy finance expert. And they'll introduce themselves at the right time. But maybe if it would be okay, Senator, I will take a few minutes and sort of do an overview of what we've been up to with the EAN weatherization process. I'll spend a couple minutes talking about VGS Vermont Gas and our role in it, because it may not be obvious in that, and then sort of set it up for Maura to talk about VHFA's role, and then Bob to get into his great research work on alternative financing options that our team has been exploring for some months now.
That sounds great. Thank you.
Great. Well, thanks. I'm not sure I'm a stranger to everyone, but I have been in my new role as President and CEO of VGS since October 1st, 2020. I've been working in and out of the energy sector for the last 10 years, including a 4-year stint as a general manager of Burlington Electric Department, working with Mayor Murrow Weinberger. I also started an energy company, NG Advantage, Natural Gas Advantage, with Tom and Mary Evslin, worked at Green Mountain Power. Before that, I also was Irene Recovery Officer under Governor Shumlin, and served in various roles for Governor Jim Douglas, including Secretary of Administration, Secretary of Transportation, and on the governor's senior staff. So I early, at some point during the, actually it was during the Great Recession, right before the Great Recession, when oil prices spiked and we saw Vermonters really struggling to heat their homes. This was in the 2006, 2007 timeline. I worked with a number of members of the legislature and others to work on several initiatives that were going to move weatherization forward, including Dusting Off, Button Up Vermont, and several other things that we did. And it sort of whet my appetite for weatherization. I understood it very intuitively that if we make an investment right away on weatherizing someone's home, we were able to put money back in their pocket pretty much immediately. And even more importantly, we get their home warm, we make it healthy. And I think what we've learned since is that we're doing a great service to fighting climate change and reducing overall greenhouse gas emissions. So my interest in this topic dates back to then, and I've been working on it in various forms for a number of years with different proposals to try to ultimately find more funding for it, as we'll talk about. And as others have mentioned, our problem in Vermont is not that we don't have a really robust network of weatherization providers. In fact, I would argue we have one of the best networks of this. It's that we don't have the funding to make this work. We need to provide that funding in order to really get this going. So before I get into that, I wanted to just talk a little bit about why VGS and why VGS is so interested in it. I'll start by acknowledging, maybe just something that people don't recognize. We have been proudly serving natural gas in northwestern Vermont for over 55 years. Natural gas, in its traditional form, is a fossil fuel, and I want to acknowledge that we understand and we acknowledge our role in creating climate change. But we're also acknowledging that we are committed to do something about it. We, as a company, back in 2019, late 2019, launched our climate action plan, which sets an ambitious goal to be net zero by 2050. Now, there are a lot of oil and gas companies in the year and a half or year since that have come out with similar goals. We were one of the early ones, but we said 30 years is a long way off. We wanted to set something that's a little bit more immediate. So we said, we want to reduce our customers' greenhouse gas emissions by 30% in the next decade. That's quite a short time frame for this. It's and probably one of the most ambitious goals in this sector. And we're proud to do it. And we said we do it three ways. The first is what we're talking about today, energy efficiency. Energy efficiency is the cornerstone of our climate action plan. We set forward an ambitious idea to invest our own capital in energy efficiency that we could start to work earlier, understanding that if we do the energy efficiency work today, we're getting a cumulative carbon savings every year going forward for the homes that we're able to weatherize. So our energy efficiency budget for the 3-year period starting now is almost 50% more than it was over the last 3 years because of the money that VGS is investing in this for our customers. The second thing, which I won't get into a lot today, I just want to mention, is that we want to increase the amount of renewable fuel in our overall portfolio, increasing the amount of renewable natural gas, RNG, by 20% by 2030. This would help improve the renewability of our supply. And when we talk about RNG, we're thinking about captured methane from farms, landfills, and other ways of digestion. We're also thinking about things that are not natural gas. That is district energy, that is geothermal, that is hydrogen, those are all topics. We could spend an hour on each of those topics, and we could do that another time. We hope we have the chance to. The final leg of our climate action plan is to do innovative partnerships that spur quick action on fighting climate change. An example of that was a recent announcement in 2020, where we partnered with the airport to do sound mitigation for homes that are around the airport. It's a way where we can both make those homes more soundproof, but also in doing that, it's really weatherization work, and we can add insulation change out windows, et cetera, and to make those homes more tighter and ultimately better for the planet. So that's where VGS comes into this. And so what is this? What's this thing that we've been up to? Over the summer, Energy Action Network, EAN, led by Jared Duval, who you've all heard from, and is a great leader in this space. They put out a challenge for their annual summit to develop teams to tackle these big issues. And I, with a number of folks that are sort of that range the spectrum, broad coalition of groups, came together and said, we want to figure out how we can really do weatherization at scale. And when we talk about weatherization at scale, we're talking about new and novel ways to deliver weatherization to low and moderate income customers that far exceed the numbers that we've been doing over the last 10 or 20 years. So the partners in this effort are, what I mentioned, were broad. They're groups like Efficiency Vermont, Energy Futures Group, Richard Fazey, who you've heard from, NeighborWorks of Western Vermont, RAP, VNRC, VIPSA. We've had healthcare partners in this. We've had legislators. Senator Bray mentioned, but he's one of several legislators that have been involved in this, and several others, including VHFA, Bob Barton, Mark Milhally, who have all partnered to think of these new and novel ways. This committee met several times in advance of the Energy Action Network Summit, and October 1st at the summit, we pitched this idea of how we really, we said at the time, how we strap a rocket to the back of weatherization and really let it get launched. We were one of the most popular pitches at that summit, and following that summit, we have been working really through weekly meetings to research and develop ideas to explore these new and novel ways. I want to emphasize what Senator Bray said. We don't think there's a silver bullet to this either. We think that we're going to have to find a lot of different ways to do this, but we identified a few kind of early problems, some of which that we're addressing and that we'll hear in the testimony today. One of the persistent stumbling blocks that we're hearing is obviously the state has not been in a position, and we don't expect it will be in a position to provide annual increases for weatherization. So we have to be looking for other ways to be able to do this. So we've sought ways that are outside of the traditional state, the state measures. One other thing we've talked about for years is bonding for weatherization, something that I feel very strongly about, because if we bond for it now, we spend that money today, we're getting that benefit for many years to come, and we're matching the length of the benefit with the payback of that benefit. But we also know that the state has limited capacity for bonding, especially in the net state tax supported debt. We've heard that again and again. So we've sought other sort of more creative ways to get there. One of the other key insights that we had along the way for this is that that we've always entered the weatherization conversation through by thinking about it as in terms of energy and about climate, which makes perfect sense. But from another way, and Ludi Biddle from NeighborWorks was the person who gave us this insight, really brought this insight to our attention, was that weatherization is really a home affordability measure. We've looked at the great work done by Efficiency Vermont about total energy burden, and we can see that total energy burden is one of the things that drives the cost of housing for Vermonters, whether you're a homeowner or you're a renter. That energy burden is driving up the cost. So if we think about home weatherization as a way to drive down home affordability cost, I think it opens up new doors for us. It's actually one of the things that led us to VHFA. And I want to just mention, well, why VHFA? Maura is going to get into that in a lot more detail. When we looked at VHFA, we found a partner in VHFA that brought whose mission was the center of our target for this: low and moderate income Vermonters in places where they have a high energy burden and the high energy burden that is sort of not easily overcome. When we think about low and moderate income Vermonters, we're generally thinking about.
That's the third time. What does that mean?
I'm happy. Sure. It's we think about it as 120% or less of AMI, average median income, area median income, and it depends on the size of the family to get that. We think we can break it into further sections within that. There's like 80% and less AMI, and 80 to 120%. But that's when we're talking about LMI, low and moderate income customers, we're looking at 120% or less for AMI.
Thank
And
you.
Laura can get into this in more detail. That's that's exactly the focus of what VHFA does. Secondly, is VHFA has this incredible network that sort of runs sort of alongside the network that we have for weatherization. And so if VHFA can bring their financing expertise to bear with their network, we can match it with the network of weatherization providers to be able to pair this up to really deliver more value and ultimately funding for the folks who need it. And the last part is that I sort of hit on it, the flexibility. An organization like VHFA has the flexibility that the state doesn't have. They're their own organization. We'll talk about this more. They can do things that the state really can't do, and they can do it quicker, more nimbly. They can work directly with the implementation partners to tailor the needs for low and moderate income customers so that the money can get out quickly. VHFA is only one of a lot of ideas that we need. Barton, we've been exploring a whole range of options that Bob's going to get into, from socially responsible investment to kind of unique and innovative ways to approach the federal government for support, to financing mechanisms like the pay-as-you-save or PAYS approach that has been championed by Paul Stillo and Harlan Lockman over many years. All of these together will create the stack of things that we need to address weatherization. They will ultimately allow us to deliver the money more flexibly to the customers that we need it, to allow us to bring more money in. Because maybe this is my final thought, is that these things that we'll talk about today are really just the start. They provide some early flexible ways for us to get more money out into the market, but ultimately we need to provide a long-term sustainable source of funds for weatherization. We need to send a clear market signal that we're going to grow weatherization every year through the end of the decade and beyond. That's the way we're bringing the workforce to this. That's the way that we will ultimately be able to meet the state's climate goals. And so this is a great start, but it is just the start. And I will say that our EAN weatherization team is committed to both supporting Maura in the near term with the governor's proposal that he put forward on Tuesday, but also continuing the work after this to bring other ideas to the table. So I'm going to stop there, Mr. Chair, and turn it back over to you or more for the next part of this.
Great. Well, so before we move on, any questions for Mr. Lunderville from the committee or observation? Senator McCormick.
Thank you, Mr. Chairman. I'm so used to calling you Neil. Forgive me.
You can do that. That's okay.
Okay. Just explain to me the business model for sellers of petroleum to be moving off of petroleum. I envision that there actually is a good business model. I articulated that to the committee yesterday, that you simply change the commodity that you're selling. You still, but it does seem that there's a built-in disincentive to conserve for someone who's in the business of selling fuel. Just explain you've articulated the environmental reasons well, and I thank you for that. I agree with you. But explain, if you would, the business model for it.
I will. And so I will speak to where we see it from a natural gas perspective. Ultimately, Vermonters need warmth. I mean, that is there's going to be a demand for warmth well into the future. And it is going to be served by either the delivered fuels, oil and propane, fuel, or regulated fuels like natural gas or electricity. I think it'll ultimately served by a combination of all of those. So there is going to be a demand for those services into the future. But we recognize that it's not going to be sustainable for us to continue to deliver simply traditional natural gas, because there is an environmental imperative around climate change that will, either through regulation or policy enacted by the legislature, that will continue to sort of push us out of that business if we don't adapt our business to the demands that we face, and then ultimately what our customers want. We know that our customers want a more sustainable fuel source, so we have a need to change that, and we also feel compelled to change it to support climate change. So we think about how we broaden and deepen our relationship with our customers. That's sort of to get to the heart of your question. That's one. Our customers, they're not going to, most of them are not going to be energy geeks like me and going to want to figure all this out. They're going to want to hit the thermostat and have that warmth be delivered. And so on the back end, we have to figure out how we make our supply more sustainable. Ultimately, how we can deliver efficiency services to them that will allow them to use less energy, which is part of our broadening and deepening that relationship. We also think that. Well, I think those are probably the big things. I could go down a few different rabbit holes here, but that's the fundamental way that we are going to adapt and evolve our business to meet the changing demand in the market.
Am I correct then, to paraphrase back to you that you're not necessarily in the gas business, you're in the heating business?
We are, and yes, that's right. And we've always been, I like to think of it as the warmth business, The
warmth, okay.
There's need for, whether it's heating a home or do it like a processed fuel, it's all ultimately about delivering that heat, that flame, that warmth. There's a lot of ways to do that. The pipes themselves don't care what's inside of them. So if we're delivering a combination of renewable natural gas, hydrogen, geothermal, district energy, but we can deliver that warmth, that would be great. And that's sort of that's our vision.
I'm pretty sure, correct me if I'm wrong, the Wright brothers started with a bicycle business, right?
They did,
Yeah.
Right.
Okay. Thank you, Mr. Chairman. Thank you.
Thank you, Senator.
Thanks. And piggybacking on that discussion, so one of the things Richard Fazy was pointing out yesterday, and Matt Cota as well, is how these trusted, established relationships between people delivering fuel and their customers, often multi-generational customers, is an important base to build on. It opens doors that can be otherwise harder to open. You said something about a stack, and it's reminding me of the PUC being in here talking about an ecosystem. And for me, the one thing I remember from Environmental Science 101 was ecosystems are robust to and resilient to the extent that they're diverse. And so I think we're starting with a diverse ecosystem of actors. And I think to have a diverse system of funding probably is a good choice. Can you say a little bit of, you touched on it, but the workforce side of things? I think the economic benefit of doing this transition is another piece that we're interested in, and Economic Development Committee will be looking into it as well. But you're on the inside, so what do you see around on the workforce side of things?
Well, I would say maybe there are two parts to that. First, there's an opportunity. We've seen clean energy jobs in Vermont grow over the last 15 years, and across the country and around the world, clean energy jobs are growing. There's so much money going into clean energy that is an opportunity for us. And weatherization presents an opportunity to once again grow this sector of our economy, and with good paying jobs for Vermonters. So when we're making an investment in weatherization, we're ultimately making an investment in local contractors to do the work. And I think that in the middle of a pandemic, we can understand the value of putting more of those, keeping those local contractors busy, and giving more work to them and growing this part of the market. There's also a kind of a persistent concern about, will we have the workforce to deliver weatherization? You know, if you put the money in, will folks be there to do the work? And a couple quick thoughts on that. One, actually going back to the mid 2020s, when we were thinking about doing solar. I think we heard this back when at the start of the time we did solar. People were like, well, if we put money in for solar, who's going to build the solar panels? You know, there aren't enough qualified installers. And sure, we did some training grants to help put qualified installers in place. But what really made the difference was not, you know, putting the training money out there. It was creating a predictable funding stream for solar, and the market grew to meet that. So when we put in the feed-in tariff, the standard offer, and other net metering, and created a market for solar developers, they took advantage of those grants. They trained people, and we had, ultimately, it took a couple of years to grow the market, but we have plenty of solar installers. So I think the same thing can apply here. It might cost us, might need to pay our weatherization installers a little more to help grow that market. I don't think that's a bad thing. But ultimately, if we get that predictable funding ramp for weatherization, I believe the market will grow to meet it. But it needs to be predictable. We've been sort of bumping along the bottom with $10 to $15 million in weatherization money for a lot of years, and you know, we need a doubling and a doubling again. And then continuing that level for a decade to really allow us to see that's the kind of predictability the market needs to really be able to grow.
Thank you for that. Any other questions for Mr. Lunderville before we move on? Okay.
What's the plan? What's the plan, Mr. Chair?
Well, so the plan right now is to, I think, hear from I don't know if we're going to Ms. Collins or Mr. Barton. You decide amongst yourselves.
I think Ms. Collins.
Okay.
So are we going to get the plan before we get the editorial and why we ought to do it? Or what's the order of march here?
I hope I can start to dive in more to the plan. Neil gave us a great overview. My name is Maura Collins. I'm the director of the Vermont Housing Finance Agency.
Ms. Collins, I'm sorry to interrupt. A quick question for the chair. So I think what Senator McDonald is asking, and I could be wrong here, but are we working, Mr. Chair, we're not working from a bill at this point. We're not taking testimony on something. This is sort of gathering.
Exactly. So there is a bill that's actually going to get introduced next week that will become the basis for, I think, actually a strike all, and as we continue to learn from folks coming in, the job to have the plan is actually our job. So, but we're learning about partners who can help us fulfill that. So, you know, I think of us as having the framework, lining up funding, the regulatory apparatus, so that if we put increasing amounts of ratepayer and taxpayer dollars into things, that we have a way to make allocations, monitor performance, meet our fiduciary responsibility. So there's more of a framework for bringing more money to have this quote unquote ecosystem run at a higher level than it currently is, including some novel things like what Ms. Collins is just getting ready to tell us about. Is that helpful?
I mean, to me, yes. I was thinking that I was posing the question with the hope that it might be helpful to others, actually.
Okay. All right. Ms. Collins, back to you.
All right. What Neil has laid out has been, as has been discussed, a multi-month conversation, and VHFA has come into this conversation and with real humility of knowing that our role and our mission and what we've done in the state for the past 47 years is really housing finance. That said, this is a wonderful opportunity for us to partner with a lot of the energy programs that you've been hearing about, from Richard Fazy and Jared and what Neil laid out, because I actually see this as a housing program, full stop. I don't really see this as an energy program. I am in Senate Natural Resources, so I will go with that theme if that's important to everyone else. But to me, this is a part of a housing platform that has been proposed that I am excited to see what happens through the legislative process, because I see this as a wonderful complement to the expansion of the downtown tax credit program that's being proposed. There's extra money that has been proposed for several years and has had some success through last year's CRF money to expand a rental housing improvement program, the VHIP program. And so there's ways that we can talk about this weatherization program and how it's also going to marry with ACCD's initiatives to improve the rental stock in our communities. There's a growth proposed by the governor of the mobile home replacement program administered by tax credits from VHFA, where inefficient mobile homes get purchased and destroyed and replaced with either net zero or highly energy efficient mobile homes. And then a $20 million increase for VHCB has been proposed. So this $25 million for weatherization is, yes, an energy program, but it's as much a housing affordability program to complement those other sources as anything else. Our plan, to the extent that it is well formulated as we see it right now, is to take these one-time general fund resources and, as Neil said, to take some of it and support the workforce development, to build out what Neil was just explaining of to support the workforce, but in some ways supporting the workforce will be direct incentives to those players, but it will also be building this financial infrastructure that's going to give everyone the confidence that this is a marketplace that will be sustained and invested in the future. There are also, some of this money will be used for incentives, both incentives to consumers for classic rebate programs and loan enhancements to make the loans more affordable and more appealing to customers to undertake this work and to have the burden of workers in and out of their home. You know, sometimes there's an incentive needed to get people over that initial hurdle, but additionally some incentives to lenders. And this is how we bring in some of that private capital. We need a way to incent lenders to put up some of their own money so that we can grow this pot, because the $16 million for the VHFA piece of this initiative is a wonderful first start. But what you will continue to hear from us is that it is the growth of that that's really going to bring it to scale that will build that marketplace. So we're looking at ways that we can build on already successful programs that partners have had in place, like loan loss guarantees, so that if lenders put up their own money, they don't have to have all the loss risk on themselves, as well as interest rate buy downs, where we can thoughtfully take the money and make the loans more affordable. As Neil mentioned, we are looking at households that are at about 120% of the area median income. I'm going to roughly say about people earning about $70,000 or less. This will be for homeowners and for renters. So for renters, we're hoping to have a lower income target, probably closer to 80% area median income. And therefore, when we talk about the potential of bonding and having these incentives and just doing weatherization work, there is a barrier right there naturally, because the lower the income, the less capacity these households have to take on debt and to service that debt, to pay that debt. VHFA is well aware of this dynamic. This is what we've been built on for 47 years. We don't need to be sort of reminded of the challenges of low income Vermonters, because that is exactly who we work with. And that's why we are hoping to use this as a way we can come to the table and talk with our partners like fellow lenders and say, okay, what's your cost of capital? What's our cost of capital? How can we most efficiently have these dollars stretch the farthest and get those interest rates and costs to Vermonters as low as possible? That could mean some conversations with OEO they have additional $4 million in the Weatherization Assistance Program. That is a wonderful program that is being administered great through Office of Economic Opportunity with Sarah Phillips and her team. Jeff, I think you've already heard from yesterday. But I'm wondering if there's ways, could a household who's very low income, under 60% area median income, could a renter get some Weatherization Assistance Program grant funding? And then we could offer a 0% loan for some small piece of that. And maybe that loan only gets paid back when the home sells or transfers in some way, so that it's still affordable, but we can make those dollars from weatherization stretch farther. There are lots of other states that do this kind of work. I have a national network. I'm on a national board of other state housing finance agencies. There's a VHFA in every state. Just the first word is whatever the state name is. And I have a fact book of the programs they run, and I have a strong network of other executive directors who those are my phone a friends to find out what programs they're running. And I know of 17 other states that where the Housing Finance Agency is either administering the weatherization funds, which is not what we're talking about here, or they take some of the LIHEAP or weatherization funds or state funds or other resources and they bond for them and do exactly what we're talking about. So right now, we're still collecting that information. I can't give you a robust presentation and detailed of who's doing what, but I know that Alaska and Maine and several other states with high energy burdens and opportunities are the ones that we're talking to really find out how they've been able to leverage money like this and grow the pie. So that is continuing, but it's just to reinforce the idea that while VHFA has not historically done this kind of financing role in Vermont, it isn't unusual. And we actually have a very long history, I'm not going to get into today, about energy lending. Actually, Richard Fazy used to work at VHFA and ran a lot of our energy mortgage programs back in the day. And the reason we don't still offer those mortgage programs that allow for greater debt because someone is folding in energy efficiency work at the outset is because they weren't to scale. I have numbers on these programs where we did 17 loans, maybe we did 100 loans through some pot of money, but it was this one time, hey, VHFA, back in the 80s, will you spend, I shouldn't say how much because I don't know, of state money, and we do it and we market it and we get the lenders excited. And then frankly, the continuing faucet is not on and it peters out. And I'm embarrassed to say, we don't have a similar kind of program right now. So what we're hoping is that what we're going to do is build this infrastructure to keep something like this going. We are looking at bonding as an opportunity. Maybe right now we're modeling about half the money. We're still looking at that and try to see if we can take $8 million and turn it into $30 million. And it's looking really good. It does mean that we need to actively grow this pot of money. And so in a few minutes, Bob is going to be talking about that, about the other sources that could support these initiatives, the models that can leverage the state investments with other money. You will be asked, especially by Senator Sirotkin, because I was asked this question yesterday morning in his Economic Development Committee. Wait a minute, I've been trying to do a housing bond and I keep being told no by the state treasurer and others. How come now VHFA is taking just $8 million and turning it into 30? What's the difference? And we started to talk about that yesterday in Senate Economic Development. That conversation will continue. But so weatherization loans are very different than the kind of perpetual affordability investments that VHCB makes to make perpetually affordable rental housing. So weatherization loans are much shorter terms, we're talking 10 to 15 years. That's a lot shorter than in perpetuity. We're also talking about loans that can be repaid over time. Many of these are going to be interest-bearing loans, especially the interest rate will probably be higher for higher income households when you get up closer to that 120 AMI threshold. So there are many differences to what the $37 million housing bond is that we issued on behalf of VHCB and for the state, and what we're talking about here. But there are some similarities. And one of those similarities is, if you remember from the 2017 housing bond, it was property transfer tax, ongoing property transfer tax appropriations that were pledged to this bond, and VHFA stepped in to issue the bond. As Neil mentioned, we are independent from the state. We have our own ratings with the rating agencies. We have our own bond indentures. This is what you all were intending us to do 47 years ago when you created us, was to play this role off the state's balance sheets. We're not breaking any rules by doing that. Like I said, 50 states and a whole bunch of territories do it the same way. This is how the system and the game was created by the feds. But what we did then was we bonded using, at that point, PTT, so state resources, and handed the money over to VHCB. And if you're in committees where you hear VHCB, especially this one, talk about the success of that initiative, it's VHCB who was handing out and awarding that money. This will be similar in the fact that VHFA is a housing finance entity. We are not going to become energy contractors. We don't have the staff to do project management. We need that ecosystem of the energy efficiency industry to be there so that we can do our financing magic that we're so good at, but then we need to have those partners that we can hand the money out to. We are not looking to change that system in dramatic ways. What we are looking to do is do something that was done 40 some odd years ago when VHFA was created. The legislature saw an opportunity of the kinds of bonds that VHFA issues, which I'm not going to explain now. And when that new opportunity and that new financing was available, there wasn't enough affordable housing lending in the state. At that point, lower income Vermonters, interest rates were high, and low income Vermonters couldn't afford homeownership. And so VHFA became that program for lenders to offer. We don't have branches across the state. You don't actually come to VHFA for a mortgage program. You go to People's United, you go to NEFCU, you go to Union Bank, you go to any one of our many participating lenders, and you get your mortgage from them. And then after the fact, they sell it to us a couple months later, and we provide the capital to them to go do it again. And that was how we were able to have affordable mortgage products available across the state in the most rural areas where local lenders maybe didn't want to create a boutique program and take on that risk. Maybe they didn't have the capital for it, and they didn't want to do all the marketing and forms and administration of the whole thing. I see that same marketplace when I look at weatherization lending right now and energy lending. A recent report said that there are 44 lending institutions in Vermont. I'm sorry, I've read so many reports in the last few weeks. I can't remember. This wasn't Act 62. I think this was the CEDF report. It doesn't matter. Neil will know what I'm talking about. But there, it said that there were 44 lending institutions in Vermont, and 53% of them offer a home energy loan product, but 47% of them don't. So what I want to do is serve the lenders of the state. And I'm having a call with Chris Delia from the Bankers Association after this, and I still need to reach out to Joe at the Credit Union Association, but talk about this as a way of offering their partners and the lenders in the state a new lending product to serve their customers without them having to worry about the infrastructure of the administration, all of that. They can use new opportunities as we expand them. We're building off the successes that VEIC has had with their home energy loan program. And we're using existing programs where we can see how many low-income people they served, what interest rates they use. There have been programs that we can, again, bring to scale. to wrap up, I just want to point out from the Act 62 report a couple of quotes that really I have to tell you, I didn't know the Act 62 report was happening, I'm embarrassed to say, before it came out. And now that I've read it, it feels like it's a perfect segue into this kind of initiative, because there are quotes like, the single most important step for Vermont lawmakers to take is to establish stable, sizable, long-term funding for decarbonizing the heating and transportation, and that the funding is the linchpin for achieving Vermont's goals. They also said new funding strategies should be affordable to all Vermont customers. Now you're talking my language, because this is our mission-driven purpose here. And that this shouldn't jeopardize current energy programs such as Weatherization program, and should be prioritized to benefit low and moderate income customers. Well, that's what we're doing here. And it talked, I know you've already heard about the economic impact modeling, but that sustained annual investments are going to increase personal income and increase the state's domestic product and improve jobs and all that. So I really think that what we are planning here is to address the barriers that we know customers have, things like cost, maybe their unwillingness to take on debt and long paybacks, and build an affordable system that can be available to them where we can overcome those barriers, building out the workforce and ensuring that we have a more strong housing stock as a result. We all know that the state's housing stock is the 9th oldest in the country, and it's really important that the investments that we can make now will live on in generations. And so taking action now is going to be critical so that we can, yes, achieve the climate goals we've been talking about, but start helping these households build the equity that's going to really lift up, have that tide be that lift up the economic boat for the whole state. I'm happy to take questions. You're muted, Mr. Chair.
Sorry, thank you. It's music to my ears to hear you talking about creating a resource that then can flow out to those who want to draw on it, like all the credit unions and banks. I mean, I think we've always tried to, the vision was to create an opportunity for others and then have them motivated to participate in a sort of a healthy market-driven way, because they see there's an opportunity for them to do more business, and it's the kind of business we're hoping to encourage. So that part is great. Thanks so much for that. One quick self-indulgent side note: Energy Rated Homes of Vermont 5-star certificate number 16 was given to me, signed by Richard Fazy in 1986. So it's been a long journey. So, and in terms of VHFA, to be able to fulfill this mission that you're talking about right here, do you need any statutory changes to enable you to do that work, or is the statute, are they already flexible enough that this fits in within the guardrails you have?
You know, we have a pretty open statute. And so while one could make the argument that no statutory changes are needed, investors in any bond are going to be ultra critical and really want to see belts and suspenders. So when the PTT bond happened, we put a new subclause in there that says, and VHFA can do what it needs to do to achieve Act whatever number it was, and it referenced the PTT bond. So we are proposing that the legislature do something similar so that it is very clear to investors, but it would be a very minor statute change. Again, this is why you all created us 47 years ago, is to step in market situations like this and play this role.
Great. So let's follow up after the meeting on that slight change. And I'm figuring clarity is always good. And probably it translates potentially into lower costs in part. People feel more secure working with you, right?
Yes, and we would want to, anything we set up, we want to alleviate any concerns. Investors are a nervous bunch. And so the more we can again, give them those belts and suspenders, then
Yeah.
I think we're happy to do that, and I'm guessing you would too.
Yeah. Okay, great. Any questions for Ms. Collins? Well, that's very helpful and exciting to hear about another way of coming at this. If there are no more questions for Ms. Collins, then Mr. Barton, I think you're up.
Okay. Well, for about up to 5 years ago, I basically did energy and renewable energy financing and energy efficiency financing. And our company, Catalyst Financial Group, was national as well as international. And I'm sorry to say, we did very little in Vermont because the project sizes we did were like from $1 to $50 million in size. So we did billions of dollars of financing in the energy space, and all the non-traditional energy space, not oil and gas and things like that. So we had our clients, just to give you a sense of what we did and who we were. Our clients included major utilities who wanted to offer energy financing and didn't want to use necessarily their own bonding capabilities. So we had clients like Con Ed or PG&E or National Grid, and all the major utilities were clients of ours where we helped raise funding for them. We also raised, we managed about $100 million during the ERA funding time for DOE when we had grant money, if you guys might remember, that was given out to cities and towns. And there was actually, when Obama was in, there was $3.2 billion given out to cities and towns. And they were supposed to use create lending programs for it. But most of the cities and towns really, even though they wrote grants to get the money, didn't know how to do that. So DOE picked 2 companies to provide technical assistance to cities and towns for the $3.2 billion. And we managed about $100 million of that. We were also the exclusive advisor for EPA for 12 years for their public sector financing. So that meant anything that was around energy efficiency, and if they were writing publications or having us go to governors of states and cities, we would do that on behalf of the EPA, so that we would talk about how to finance energy efficiency. And then we did a lot of work for cities and counties. So we have a broad experience, and I wanted to say 3 things we pioneered, because in the finance field, it is almost impossible to pioneer unless you do something like crazy things like derivatives and things that really have almost no financial value to anyone other than the esoteric people that created in Wall Street. So we did something in 1985. We actually helped pioneer the first time on-bill financing was done with a utility called Bay State Gas. There wasn't even any literature in our field at that point about it because nobody had done it. But the utility wanted to use it so that they actually could get people to fuel switch to Bay State Gas, and they would do efficiency at the same time. And we created the first on-bill finance program, and then it's become quite popular. I'll talk about that later. We also pioneered something called energy performance contract financing. We did that in the early 90s. We had raised $20 million of money that I managed for a wealthy family, and they were willing to take the risk to do performance contract financing, which you guys have probably heard about in different testimony at some time. If not, I'm glad to answer questions about what that is. We ultimately did over $1 billion of that business with the federal government in performance contracts. And the third thing we pioneered was when we were actually one of the first companies, if not the first company, to do any form of energy efficiency financing, that we started in 1980. And I can tell you, I had to go to hundreds of lenders to convince them that they should lend for something called like light bulbs, like CFLs, or things that were energy efficiency improvements, because the banks at that point in 1980 didn't see that as being good collateral. So they were just nervous about it. So we helped actually create a market and wrote some papers about why banks should do energy efficiency lending, which now is pretty boring to say because 40 years later, it's like everybody does it and nobody even thinks about that it wasn't done. But I'm happy to say that we actually pioneered on that as well. So I'm here to talk about some non-traditional ways we can bolster money for any program that we create for weatherization. And doing it through the VHFA would be great because it has good credibility and would allow actually a lot of these things to happen. So I have a handout that we'll give to you. We don't have to have it now, but at the end of this presentation, either Senator Bray or Neil or I will send you what I'm having so you don't feel like you have to take exacting notes on every little thing I'm saying, because I'm going to be talking about things that I presume you probably have not heard about, as opposed to, I'm not going to talk to you about bank loans. You already know bank loans and you know what regular bonds are. So these are things that aren't those things. So you'll have a little handout later that you can review. So one thing that's happened in the finance world, there's something called social sustainability and green bonds. It's a huge field, and it's only really emerged in the last 10 to 15 years. It's actually, and really strong in the last 7 years. And when I mean big, on a global level, these bonds, these social sustainability and green bonds, exceed $1 trillion on a global level. And last year on a global level, $425 billion was issued in these bonds. So this is not a bond that just is a bond. This is a bond that has some social sustainability or greenness to it. And it keeps the issuer accountable for using the money in those particular ways. And in some bonds, it actually requires them to be accountable before the investors get paid back. An example of a green bond that I think is worth noting is that the Connecticut Green Bank, which is not too far from here, they issued something called Liberty bonds. And it's a form of a green bond. And they issued it last year. Actually, in July, they issued it. They issued $17 million worth of bonds. The bonds were from 1 to 15 years. And they decided to democratize the use of the bonds the way we sort of do citizens bonds in our state, which are very popular. You know, they go real fast. They did them in $1,000 denominations, and a 1-year bond was bearing 0.9% interest, less than a point in interest, and a 15-year bond was 2.9%, and there was gradations in between. What they did was so that people in Connecticut could have first option at it, the way we do it in Vermont for our citizens bonds. They had one day where the citizens of Connecticut could buy it. And then after that, it was opened up nationally. It wound up for them of the $17 million, about $10 million was bought by retail customers at $1,000 a piece. And about half of them came from Connecticut. And then the rest was bought by institutional investors. So the interesting thing that I just want to say on that is that here's a Connecticut Green Bank, could have been their housing authority could have done the same thing, that issued bonds that actually attracted retail investors from out of state. Half the investors that did these $1,000 denominations were not from Connecticut. They had enough interest in it that people from out of state bought them. So I mentioned that because that's unusual with bond offerings. Most bond offerings are bought by institutional investors in large amounts. So this is a way that we could supplement and use an innovative offering. I think do people want to ask questions from there, or because I have 6 different things that I was going to talk about. What would people prefer that are actually on the committee? Mara, yeah.
Is that okay? Please. Okay. I just, Bob and I didn't have a chance to connect, but I just want to point out that the PTT bonds that VHFA sold a few years ago were actually sustainability bonds.
Oh,
if
cool.
you remember, during legislative discussion, they were called, it was going to be $35 million for housing. And I was getting nervous saying, what if we hit the market and interest rates up and we can't get 35 million? I was telling everyone, like, stop putting a number on it because you never know what you're going to get till the day you go to market. But because we really push this sustainability, we do by practice the same kind of push for in-state retail investments early. And we don't hold it a full day. We have the morning, actually, we leave it open, and then the afternoon open it up to institutional. And the retail interest was, I believe it was, we had $14 of requests to every dollar of bonding we had available, which brings
Whoa.
pricing better. And that's why it ended up being a $37 million bond in the end, is because not only were interest rates favorable, but also that sustainability goes a long way. So we've been talking with our underwriting partners who are specialists in green and sustainability bonding. And that is who we expect we would work with to
Good.
sell these bonds specifically. So I just wanted to reinforce that.
Good. See, I didn't know. Mara and I hadn't talked, and I didn't even know that happened. So thank you. Yeah. Well, that shows you, I mean, just from the $37 million then, that's what happened with the Connecticut Green Bank. They were way oversubscribed. They said, oh, we're doing 17, and it was sold out right away. So that's one way is, social sustainability and green bonds. There is a,
and sorry to interrupt, just for all of us, I'm looking at the clock. We're going to go till 10, so we have about half an hour. So I would suggest that we'll limit our questions, and so that you can get through all 6. We know that today is just a first visit, but you're laying out the 10,000 foot view of a pretty broad landscape, and then we'll need to dig in as we continue to work. So if you'll keep going, and I'll say if people are confused about something, let's stop. Otherwise, let's let you march right on through the rest of your options. Thanks.
Okay. Well, I also want for the committee, all of you that are doing this good work, to know that there's just an amazing amount of alternative investors and investor interest in this space. So if we can create the demand, which is the most important thing, then I think we can deliver the money. And I think because of what I've done professionally, I'm even though I'm retired now, I'm glad to bring in many other experts and people to make the things that I'm talking about operational. So these aren't like pie in the sky things. Like this is what you can get done. So a good program we should look at is, I'm sure you're all familiar with the USDA. It has a program though called RESP, Rural Energy Savings Program. And RESP is a zero interest 20-year loan. And 20 years is zero interest is a pretty good deal for anybody. And that money can be used by rural electric co-ops. It can be used by rural utilities, but it can also be used by nonprofits and state agencies. So we're going to find out whether or not the VHFA is an eligible borrower, because if we could get zero interest money, then you don't have to buy that down with whatever other money you're using. And so it's a good catalyst and a program booster. I want to also say there's a group in Washington, D.C., which is not on my handout, sorry about that, called EESI. And they're a nonprofit that will provide, and I've talked with them, the executive director very well, they will provide free advice to us and consulting about how to get the RSEP loan. So I just want to say that. So if it doesn't have to be complicated. Maura also has good connections from past work. So I think we're well prepared to be able to apply for this. Third thing that that can help bring down interest rates from regular money and also provide loan loss reserves is something called program related investments. And it's PRI is what it's called. It's become a very huge space for the foundation world. So a program related investment, PRI, there are about 70 or 80 foundations that currently do PRI. And an example of one is Ford Foundation has dedicated about $200 million to doing it. A PRI, for the most part, is a concessionary loan or credit enhancement, something that is below market on behalf of nonprofits, and in some cases, for-profits. It could be social nonprofits, benefit corporations. And so typically by law, actually, the foundations, when they do PRIs, instead of just giving a grant and then nothing comes back, they lend it out to a group that's aligned with what they do, and they get it back. And it can be, and typically the PRI loans are from 0 interest to 1 or 2%. I don't think I've ever seen one higher than 2%. And the loans can be from, you know, $1 to $20 million. I know the highest I've ever seen is 75 million, but that's a crazy high amount and rarely happens. Gates Foundation and Packard and lots of others have put money in this. And so this is a multi-billions of dollars have been spent on PRIs. We could use it in a way, if we can get a PRI from, say, MacArthur Foundation or Ford or Gates, we'd get low interest loan money again. It wouldn't be 0. It might be 0, but it could be 1 or 2%. And they tend to be 7 to 10 years. And the good thing with PRI is because it's from a foundation, foundations expect, you know, and they don't sort of make this public, that about 15% of the PRIs will not be repaid. So all they do then at that point is if a project is really cutting edge and it can't be paid back, they write it off and make it into a grant. So it's a very different thing. It's not like getting, it's even better than a 0 interest loan from the feds, because the feds wants their money back. This is an example where we can get a 0 interest loan. And if things went really terrible, it could be forgiven. Related to PRIs, but different, is that foundations also do something called mission-related investing, or MRIs. Sounds almost surgical, an MRI. You know, it is surgical, but in this case, it's a surgical intervention by a foundation to use its endowment money to invest in social causes that they believe in on a market basis. This is pretty revolutionary. Foundations, for the most part, were always following what they call the prudent man rule, you know, as do most fiduciaries. And they avoided actually using their endowments, and they would only put their endowments in the stock market and bonds. About 10 or 15 years ago, various foundations, including Ford and Gates again, the Heron Foundation, started saying, you know, like, why don't we walk our talk? Why don't we actually invest our money? Ford, in Ford's example, $13 billion. You know, Gates, huge amount. Why don't we invest it in something that actually does, that's aligned to our mission, as opposed to just putting it in the stock market, in the bond market? So no foundation can afford to take 100% of its assets to do that. Actually, that's a lie, because the Heron Foundation is taking 100% of its assets and doing that. It's the only foundation, I think, in the world actually taking 100% of its assets and investing it in things aligned with their grant giving. But Ford Foundation has committed up to $1 billion of their endowment money to basically make these kinds of investments. And Gates Foundation has been doing a large amount, between 1 and 4 million. And the favorite part of these guys is affordable housing. A lot of them just love investing in affordable housing and getting a market rate or a near market rate return. Typically, they want market rate because then they can say to their board of directors, well, we're getting a market rate and it just happens to be here. It's not there, you know? So it's an easy thing for them to do. So MRIs is another way that if we follow to see whether there are regional or national foundations that would do an MRI with us if we had a program, and it would have to be a large entity. And quite frankly, there's only a few dozen in our state that would work, and the VHFA is one of them, because they don't want to make investments out of their endowment into an entity that they don't believe can repay. So it's got to be a strong entity. Another thing that we might be able to use for our group is foundations have historically guaranteed loans of nonprofits at different times. And it's been done on one-off policies. And there's actually been hundreds of millions of dollars done that way. But you have to find each foundation that will do it and under what terms. So recently, the Kresge Foundation last year created a pool called the Community Investing Guarantee Pool. And they put in $10 million, and a few other foundations put up money. So they started with a $35 million, a $31 million pool, and they're bringing it up to $75 million. And that pool will guarantee loans, and they will guarantee loans up to 15 years. So depending upon, like, if we're issuing a bond and it happens to be for very low income people, this may be a way to credit enhance the bond, and so that we actually get a better rate. And this will be competitive since it's a small pot of money. So that $31 million is sort of chump change. It's not a lot of money. It hasn't been used up. They've only used up about 10 million because they just started the program. But it's an interesting program. And more importantly, even if this pool dries up, because it's a small amount of pool, each of the foundations in there are committed to doing basically guarantees for high impact projects. So we could approach those foundations. The last thing I was going to say, and I don't know, I hope I'm not talking too fast, but I wanted to allow time for questions and answers, is there is a very unusual program that's emerging in the bond market, and it's called Pay for Success bonds. And it's still, I would call, fringy. It's not made mainstream at all. And it may never make mainstream, but what it is it's been run by a group of nonprofits that work with high social impact investors who are willing to basically issue bonds or notes to fund projects, and the projects tend to be from $10 to $30 million in size, can be higher, and they issue the bonds contingent upon the achievement of specific outcomes. And this has come out of the movement of where people feel that the government spends a lot of money, but it has no accountability about what it performs. And so this movement is saying, hey, if we're going to say, let's put $20 million into prisons, and if we do this program in prisons, this will reduce recidivism in prisons. But you put up the 20 million, it maybe doesn't reduce recidivism at all, but you still have to pay the bond. This is a situation where if the metrics that you had created with the bond were not met, the bond payers doesn't get paid all its money. Either gets paid less or none. So it's called Paid for Success. These are, and the people who are leading the investment in this, like the Calvert Foundation and the subsidiaries of large banks that are the community investment arms, are willing to take high risk, and in some cases, the more risk you want to shift to the funder, the higher the cost becomes, and the cost could become up into the way higher than a tax exempt would be. So this kind of situation was used in DC recently, actually recently, meaning about 7 or 8 years ago, where they were having a lot of overflow from sewage when it was raining a lot, and it was all going into the local rivers, water basins. So a social investor put up $30 million on the contingent upon that the investment would reduce the runoff and sewage runoff by 18 to 46%. And if it didn't reduce it by 18%, the bondholders got the bond issuer got paid from the $3 million from the investor. And if it performed within what they said it would do, then the bonds were paid in full. And if in fact it exceeded 46%, bonds had a premium of $3 million extra to the investors. So this was an innovative way to actually tie bond financing to real outcomes. It's more expensive to do this, as you can imagine, because this is a lot more about negotiating. This isn't just issuing a bond. This is about getting the right partners and then everybody in the room agreeing. And about $1 billion has been done in using these kinds of bonds already. So I say that I don't think that we'll probably have to use that, but it's used in situations where people are wondering whether what they're paying for will really happen, and they won't do it unless there's a guarantee. And this is a guarantee where they'll get paid. So that's the 6 kind of things that I popped up with. I mean, I could say a dozen, but I also realized everybody would go numb in the amount of time I have. So I limited it to 6.
Well,
I had one other thing I was going to say. I don't know whether,
yeah, please,
Chris, whether I think, all this stuff, having done this all my life, and we specialized in doing what we called, odd story credit stuff. We tried to look for how do we move the market in areas where traditional lenders won't go. That's why we started doing energy efficiency financing. We did performance contract financing because, it made a lot of sense. It was a great marketing story. And all this stuff is important, but you have to build demand. And that's the Achilles heel in most of these things. I mean, if you have $1 billion and everybody commits to $1 billion, but you have $20 million of demand, I mean, you still have, that's what you have, it's $20 million in demand. So building demand is really important. And one way that I have known in my life that is the most effective way to build demand, and we do not have it in our state at this moment, is to create an on-bill finance program that is to the meter. In other words, it's a program that would have the permission of the Public Service Board, through a tariff. There is different on-bill financing programs. It doesn't have to be to the meter, but to the meter or so that there's a tariff creates some real magic. And why I say this is these types of programs, on-bill financings have been around for we did the first one in 1985. That wasn't to the meter, but they've been around for like 30, 35 years. There is huge participation in programs like PAYS. I don't know whether anybody's testified about PAYS to you. Yes or no on that? Because I don't want to.
No, we have not.
No,
we haven't
okay.
heard.
Oh,
we haven't heard of it.
Oh, wow. Okay. Well, I say PAYS because PAYS was actually created by two Vermonters, the Energy Institute, Paul Silo and Harlan. They created a program called PAYS, which is an on-bill to the meter finance program. There are other programs. So PAYS would be, for all practical purposes, a brand name. It's not, and it represents a certain methodology, but on-bill financing to the meter isn't limited to that. The key aspects of on-bill financing is that there's no upfront money and it is not a loan. So if any one of you guys took out a loan for $10,000, it's a loan. It's a loan for us. We have to pay it back. But if you get an on-bill financing program, if the loan is, hold your breath, actually to the utility meter. So if the utility meter in your house was meter 101, the $10,000 loan goes to utility meter 101, doesn't go to you as an individual. It goes on your utility bill, and the amount you pay on the utility bill is less than what the savings is. So this becomes an irresistible marketing offer. It's like, oh, I don't have to take out a loan, and you're guaranteeing, you're estimating to me, in some cases it can be guaranteed, that the amount of money that I pay in my utility bill is going to be less than my savings. So that creates a lot of demand. And in fact, this is not a promotion for PAYS, but I have PAYS literature, so I looked at it. And PAYS' data says that for the most part, between 50 and 75% of the people that have given a marketing offer about energy efficiency, will take it if there's a PAYS program, which is way different than regular, energy efficiency. My conversion rate is more like 15%. We could check with EVT, but it's really, really small. It's hundreds of percent less than what it is when you say to somebody, you don't have to put up any money. It's not a loan. If you sell your house, you can the remaining amount of that payment goes to the next homeowner. So it is a method of getting people to do things without taking on a loan, which people are really loan averse. It's particularly useful when you have renters and split incentives, and particularly useful for lower income. The way most of these programs have worked in I think it's in 35 states now, has been that you use just the utility bill history, which is pretty unusual because generally, banks are going to use FICO scores, they're going to use debt to income ratios, and they use a whole bunch of other things which disqualify anybody that's low to moderate income. Not always, but it disqualifies a huge amount of people. So this actually allows you to have low to moderate income people doing things that they would be declined for from credit from other people. And I guess the largest thing is if you're doing low to moderate income for housing, and I'll stop with this, it overcomes what we call split incentives. And I don't know if that's jargon that I'm using or it's stuff you guys have heard in testimony before. But a split incentive is where Senator McDonough owns a property, but that property he owns, and it's a 4-family property. Well, all the tenants pay for the utility bills. And so he's not that motivated to make it really efficient because he doesn't pay the utility bill. But maybe he might, because he's just a nice guy and he'll spend it. But not every guy is like that. So so when you do on-bill financing to the meter, whatever building Senator McDonald owns, meter 102, that's where the loan goes to. And I mean, the loan goes to the renter. So if the renter is paying the bill, so say the loan is for $100 a month, but the renter is saving $125 a month, Senator McDonald would advise them that there's going to be energy improvements made. They're going to see a new line item on their bill, but the net savings is going to be less, so they're going to save money. If they move out and they only rent it for a year or two, the next renter inherits it. So this has been a program that utilities started, many years ago, just to be able to deal with renters and split incentives and low-income people. So I could go on ad nauseum about this, but I'll stop there because we've got only 10 minutes for questions. But it's a really important thing, I think, to think about. There is no request of you guys, and actually, my understanding from having read Pace University's law school did a study for us, and there is no statutory changes needed to make this happen. It just needs the blessings of the Public Service Commission and a tariff attached with it. But I tell that to you because in the long run, everything I'm talking about, oh, we have a lot of money, it doesn't matter unless you create demand. You have to get people to want to do it. And this is one way to get people to want to do it.
Well, this year I had a very light Thanksgiving dinner because it was an unusual year, but usually it would be a big meal and then you'd move to the next room and have a long family discussion while you're digesting. I feel like we just had a big Thanksgiving meal of information in the last 90 minutes.
Yeah.
And in a more perfect world, we would take a break, reconvene, and have a longer discussion. Our next witness is coming in with a hard start and stop. Let's give ourselves just 3 minutes at this moment, knowing that this was an introduction to a lot of great material and that we'll be returning to things. But, and that way we'll take a very short break before we hear from Sarah Phillips, who runs the state's low-income weatherization program. So let me look around the room and see if anyone wants to follow up with some questions.
And I just wanted to ask you, Senator Bray,
yes,
could you send them the PDF that I sent to you that that outlines what I said? That way,
so,
I didn't have all your emails, and this way it'd be more specific with more examples. Yeah.
Yep.
Thank you.
Thank you. Yeah, anything that we get as a committee, we post to our website. So anyone watching the YouTube version can go to our website and also see all the same handouts. And
okay,
then
see how I don't do that.
Email them to us. Yeah.
Yeah.
So you're now a star in the Vermont YouTube Energy universe. Okay. So any committee questions for Mr. Barton or our other guests this morning before we take a short break? All right. Well, thank you again for a information-rich meal, and look forward to continuing to work with you. And now we'll take a break. It's 9:54. We'll reconvene at 10 o'clock to hear from Ms. Phillips. Thanks again, everyone.
Thank you so much.
Thank you for your good work. Yeah. Bye.
Bye.
All right, so I hope the committee is waiting in the wings behind their squares. Good morning, Sarah. Good to see you again this year. Let's see, we have 1, 2, 3. We have a quorum, Senator Westman, Senator Campion. I hope you're nearby. Here they are already. I understand you have a tight schedule this morning, so it's 10 o'clock. Let's jump right in. Thanks for coming back to talk to us about, you're probably aware of what we've been talking about in the last 2 weeks, and now the heat has gotten turned up on everything in a good way, no bad pun intended, because the governor's talking about sending more money into weatherization, which is sort of hand in glove with the trying to grow the programs, which is we're working on a bill to do just that. So I just wanted to make sure we have 2 new members of the committee. So we wanted to have a chance to have you help us all bone up on what your programs do and talk about opportunities to do more, barriers to doing more, just help us understand how we might make even more progress this year than we've made in past years. So with that, please take it away.
Oh, all right. So for the record, Sarah Phillips, I'm the director of the Office of Economic Opportunity in the Department for Children and Families. And I believe it's nice to see many of you. And those of you who are new to the committee, great to be working with you in this work. I think I know that you heard from our weatherization administrator yesterday, Jeff Wilcox, who provided an overview of the program and some others. And I know that you just heard from Maura Collins and others talking about the proposal involving VHFA. I haven't prepared any specific testimony for you all this morning. I'm happy to answer questions about the one-time funding that's been included in the governor's budget proposal for weatherization, or I think Senator Bray, as in past years, you all have asked us some questions about barriers to ramping up, and I think you all are generally aware of those, but obviously workforce challenges being one of them, and we've done some modeling and various iterations around how quickly we could ramp up and how long we could, would want to sustain that, and I think, lots of thinking has been going into how to do that in the low-income weatherization program. So I guess I haven't prepared specific testimony this morning. I just understood you all might want to, you had some questions about those specifically. So maybe I'll just let you ask your questions and I'll try and answer to the best of my ability.
Sure.
Okay.
So we are going to hear from Mr. Walk, who's going to tell us about the program at 11, who's going to tell us about the governor's proposal in overall. But in terms of, can you just remind the committee of what it is that specifically is happening for your office within that larger grant program that the governor's bringing?
Yeah, great. No, that's a fair question. So we've proposed $4 million for the low-income weatherization program to be spent over 2 years, which is essentially a 20% increase in production. We always have to be thoughtful about those kind of increases, right? Because it takes adding staff, and of course, the ramping up for 1 year and then ramping down is challenging. So a couple of years ago, we did get a one-time funding increase. I think it was $1.3 million that we've been spending over a 2-year period. Part of that investment we made actually in piloting a statewide approach to multifamily weatherization in the low-income weatherization program, and we invested some of those funds in 3E Thermal, which is our partner around multifamily weatherization. We issued an RFP and came back and did that to expand that work. The low-income weatherization program has always done multifamily weatherization rentals, right? That's always been a part of the program. Tenants still have to income qualify. And in those cases, landlords are required to make the investments around health and safety, and we only do the energy efficiency investments. So this was just a way for us to expand that work statewide with some integrity. So we made that investment. So I say that because with the $4 million, a big piece of what we'd like to do is continue to do that work, to invest in 3D thermal, to do that multifamily weatherization work. And then the other portion will go towards our 5 statewide weatherization providers, 4 out of 5 being the community action agencies that deliver weatherization services on the ground. So our proposal is to do the $4 million over a 2-year period, and essentially between the 2-year period, we see an increase of about 380 units of production. The other piece that we've included in that proposal is the allowability to use a small portion of those funds for additional home repair or vermiculite remediation needs that typically come up during the weatherization of low-income homeowners, right? So we know we have really old housing stock in Vermont. A lot of those old homes would really benefit from weatherization, but other things prevent us from weatherizing the homes that are above, what we're typically allowed to do in weatherization in terms of energy efficiency measures. So our home weatherization insulation. And so a big one being vermiculite, and we have done a lot of work to leverage other resources, but we know that when we can contribute a little bit to that vermiculite abatement or remediation, that allows us to not defer the home. Deferral is when somebody's eligible, they're up for weatherization, but we say, gosh, sorry, we can't weatherize your home because you got to deal with this vermiculite issue first, and that's heartbreaking, honestly. And so we've done a lot of work to not have those heartbreaking conversations, and so we've asked for permission to spend just a tiny bit of funds on vermiculite and other home repair issues that come up and otherwise prevent weatherization. So that's our sort of proposal around the $4 million. The other piece I would just say in there that's really great is that we have worked with our providers, during April and May of last year. They shut down production. That impacted meeting targets for last year in terms of weatherization. They have folded those targets and that unit production into their goals for this year. So they've already been ramping up to be able to do more this year to make up for that lost production time. And essentially what this $4 million does is let us help them continue at that ramped up level, right? So they don't ramp back down. So they've been making investments in adding crew staff and training. And so, it feels key to let them continue on that path rather than have them ramp back down. So that's what our proposal is based on, kind of thinking about those pieces.
Great. Well, that's very helpful. And I'm not sure if it's the same 1.3 million. 2 years ago, we sort of freed up 1.3 million out of a passing operating surplus at Efficiency Vermont in order to bring more money to thermal work. And although it wasn't very satisfying to only do 1.3 million, what we've been telling ourselves, and it's good to hear that it seems to be working, is that each time we do something more, it helps build towards being ready to add on another increment on top of that. So
I think that's right. I would just say, Senator Bray, I think we shouldn't let the need and the desire to do much more stop us from doing a little bit more, because the reality is that you ramp up a little bit at a time, right? We can't double or triple overnight. And so each of these incremental steps is headed in that direction. We've been using those as opportunities to build our capacity, including, frankly, the fact that we shut down production with COVID. We used that as an opportunity to ramp up a little bit this year.
Yeah, great. And so I don't know if you've had a chance to look at the Act 62 report, but it's pretty much it's a very encouraging document for all of us in terms of, it really puts the seal on what a valuable effort this kind of work is for the state on so many different ways. Their punchline to all of us is, robust, sustainable long-term funding. So, I think the $2 million per year times 2 years, while we continue to work on the bill, that's why I feel like they've bought us a little time to find yet another another stream to bring in, to support continued growth beyond the 2 years. So it's great to hear that we're making incremental progress, but I'm just speaking up to make sure that we don't think that we're there in any way yet. It's just we're making progress. Senator McDonald. Your microphone is muted, Senator McDonald.
Mr. Chair, you pointed out several times that under the current level of funding, it would take 52 years to reach our goal of 80,000 houses weatherized. So has someone done the math to look at the $4 million over 2-year proposals and to see how many years it would take us to get our 80,000 homes weatherized? How many years it would take under the proposal that's being presented to us today at this moment?
Ms. Phillips, I don't know if you've re-examined the numbers. I myself have not gone back, and plus it's just a 2-year tranche, so it'd be hard to, be a bit risky to extrapolate from there. But
well, I can't put this proposal into context until someone puts it into context.
Sure, I think. Right, there's a lot of numbers that we could use for a goal for the program and what would be sort of an ambitious way to achieve those goals, sort of a more moderate way, or a slow way to achieve those goals. And
excuse me, but Mr. Chair, it doesn't matter to me what numbers we use to get to our goal, as long as every time we have a conversation, we use the same goal. So my question is, how long would it take us to get to the 80,000 homes, which we have used frequently in discussion about it being our goal, and how long would it take us to get there at $2 million a year for the subsequent years, adding an account for inflation to be fair? So I think that's a fair question, and if it can't be answered, then we'll get the answer when it's available.
Can I add just one nuance to that question, and that is the 52-year number came not from the statutory 80,000 goal, 80,000 home target. It came from a figure that the Department of Tax said, looking at all filers, they estimated how many Vermonters might be eligible for the program. And then it was like, okay, so what's our current rate of work? Divide one by the other, and that's where the 52 years comes out of. So I just want to, for the sake of clarity, say that there's an 80,000 figure. I don't know actually what the total universe that the Department of Tax estimated for eligible Vermonters for this program. I don't know if Ms. Phillips, if you've ever heard such a estimate.
I'm certainly asking an unfair question of Ms. Phillips under the circumstances, but that's not her fault. That's my fault. I would hope that when the committee tries to understand the proposals before us, we have a measurement device so that we can compare apples to apples, and we look forward to that as we move along. Thank you, Mr. Chair.
Thank you, Senator McDowell.
And I apologize to Ms. Phillips for asking her.
No, it's quite all right. I think it's a good question and a fair question to try and put these proposals within the context of larger work and larger goals. I can't say that we've done that specifically with this proposal. I'm happy to slice and dice this in lots of different ways to help advance the thinking on it. And certainly there's a lot of work in this space right now in trying to achieve different goals. And so I hadn't put this proposal in the context of trying to achieve 80,000 units of production in the low-income weatherization program in particular. I certainly could do that. I think it's easy enough to say that investing $2 million a year, annually over, it would take more than that. But, again, there's lots of ways to think about how we ramp up and ramp down. And I'm happy to do a little bit more work to put this in that context, if that would be helpful for the committee.
Sure. I think, and I think I'm just trying to remember, I think our 80,000 homes goal was a 2020 target. Am I remembering that right?
In all honesty, I don't remember. There's so many different targets in so many different years. It's hard for me to put my finger on one at the top of my head. I know we have done some work to answer the question, how many homes, what is the universe of homes left to weatherize? We have done some work around that, and I can certainly dust that off. I also think the work that the Climate Council is going to do is going to set some important targets as well that we'll be trying to work as part of that overarching plan at some point.
Right. Well, thanks. So yeah, if you can share what you dust off or tune, that would be great. And it's great that we have a Climate Council, but I think the rubber hitting the road for the work they're doing is probably 2 years off. So we're polite, but much more impatient than that. So we're gonna keep going right now without waiting for a report from those folks. We'll look forward to it, but we're not gonna hold back. So thanks for the explanation on what money is coming in. Can you say, having worked with Neil Underville and others, the concept that we're working on in the room right now is something on the order of a 5-fold increase over a period of time, closer to 10,000 units a year rather than roughly 2,000. So from your perspective, if you, what kind of resource do you see needed to make that transition? How many years before you could double and then double again, in a cost-effective way, knowing that we have limitations on how many, we're going to need workers, we're going to need training, we're going to need equipment. But if you said, okay, this is World War II, we're going to work here, what's an aggressive timeline for doubling and doubling again versus maybe sort of a less aggressive timeline? And I know this is an off-the-cuff thing. I didn't send you this question ahead of time, but I'm just trying to have a sense along with the committee on kind of how fast can we hope to go?
Yeah, I think, right. Thank you for recognizing that is off the cuff, and I'd want to go back and give it more specific thoughts. But I think, we certainly, weatherization right now, probably about half the weatherization in the state of Vermont is through the low-income weatherization program, and about half, roughly, it varies, is through, market-based or the performance contractor network. I think if you were saying how much could the low-income weatherization program, how long would it take us to ramp up to double, and what are some of the challenges that's there? That's what I'm hearing you kind of ask that question. Yeah. Okay. I think, again, I think we could try and think about it, in an ambitious way versus more of a sustainable way. I think if we're, right now doing, between 800 and 900 units a year, depending, how long would it take us to get up to 1,800 or 2,000 units a year? I'd want to look at some numbers. You're essentially talking about doubling our crew, though, right? And some of our work definitely happens through subcontractors, but doubling the workforce will take some time. I can say that fundamentally is the biggest barrier, right? Because ultimately, weatherization only achieves the energy efficiency goals if it's done with quality, and quality takes training, and it takes hiring and recruiting and retaining qualified individuals and training them. So I think that's the biggest barrier. So I would say, we certainly can't double overnight. We just wouldn't be able to meet those goals. Could we do it in 2 years? I think that's a stretch. Could we do it in 5? I think, that might be more achievable. That's still very, very ambitious, and it would take some significant investments beyond this program in workforce development. I think that's going to be the key to achieving this goal. So I'm really looking forward to working with the Housing Finance Agency around and their new role in this work. More conversations to come on that, and also I think how we can work collectively to support workforce development in this field across the state. I do think, to Maura's point, which I think she has made with your committee, I listened to a little bit of the testimony this morning, is that having a sustained funding source is key to the workforce effort, right? Having these sort of swings is difficult. I think certainly within our program, we know that's true. It's tough for us to tell our agencies they need to add crew staff and hire people for like a 1 or 2 year increase in funding, right? So having that sustained increase of funding and knowing that's an ongoing investment is going to be key to the workforce side of this as well. So I'd have to be more specific around your question around timing and doubling efforts. I'd want to go back and, look specifically at a specific proposal, but that's my off-the-cuff answer today.
Okay. Well, thanks for that. We're trying to have a conversation, not put you on the spot. And what is the main source? So we've known, to hear that workforce is our biggest challenge is in terms of growing the programs is we've been hearing that for several years. So are there things happening now to increase the pipeline of the training pipeline for people coming into this, or do we have to create the bigger programs? There's a bit of a chicken and egg thing here, and I'm just trying to figure out, are you working on that pipeline, but really we're going to need to make a bigger long-term commitment before the workforce training piece then steps up in response to that? Who goes first?
Yeah, I think, again, we have a limited team at OEO that really administers this program, right? We have 3 staff, and a big chunk of what they do is actually go out and do quality control and audits on the units. So we don't have a team that's sort of focused, or even a staff person that's focused on workforce development specifically. We do focus on a lot of training and technical assistance for our providers, but not the bigger picture around the field, right, as a whole in the community, and that pipeline piece, which I think is the right way to talk about it. We're supporting our providers in recruitment efforts and retention efforts and training within our network, but thinking about the pipeline and how to support the pipeline of folks to even have qualified candidates out there and attract people into the field. We're trying to dip our toe into that, but that takes a bigger level of coordination and collaboration across the workforce development partners in the state than I think can just rest at OEO. We're one piece of that, but we're very focused on administering our program really well, right? That's where our focus is. So I think I'm probably not the best person, the best qualified to certainly want to be at the table in those conversations, but to answer that question, I know that there's been some good work that Efficiency Vermont's been trying to do with VTC and others, and I think it's ripe for conversation to figure out what do those workforce development investments look like. So I think it's challenging for us. We're trying some new things. We worked with our providers to do some Front Porch Forum statewide recruitment efforts to Weatherization. You guys might have seen that. If you're on Front Porch Forum, you might have seen that coming through saying, hey, there's great jobs out there, because we're trying to hire, a lot of people trying to hire. But building the pipeline of folks coming into the field is not an area that we've had the resources to focus on. And I do think there's some attention and resources that could go in that direction.
Yeah. So quick question, nuts and bolts here. So who hires, and can you get paid while you're training? And what's the beginning wage for someone entering?
Yeah, so there's who hires our weatherization providers hire, right? There are
Okay.
5 weatherization providers. They hire positions at the crew level. That would be sort of your most basic position, a crew chief level, auditors. There's other positions, but the most basic level is a crew. You need a weatherization crew. You need crew workers, and you need crew chiefs, and we need auditors. That's sort of the core work. So they do the hiring. Starting wages vary across the state. One good thing that I can say is our weatherization providers actually provide excellent benefits. And so while their starting wage may be a little lower than market rate, they provide exceptional benefits compared to what somebody might otherwise see in that field. So I can come back to you with some of those specific numbers. It definitely varies depending on the market in the state, obviously, and in the Champlain Valley, that's different than in the Kingdom or other parts of the state. But I have those numbers. I just don't have them off the top of my head.
Okay,
so
sure.
they
That
do
would be
hiring.
helpful.
Yeah.
I mean,
Yep.
the reason I ask is we generally talk about the clean energy field as a good career opportunity and good wages. I know that when you add in all the actors in that field, the average hourly rate is 27, which is a pretty good wage in Vermont, I'd say, or a lot of people would find that attractive. I know people start less and people make much more, but it would just be nice to know what when someone thinks about entering, what they might start at. Thanks.
Yeah, I'll definitely follow up with that because we do have it. Your other part of your question was about on-the-job training and subsidized employment. We actually do that with our providers. So the first 3 months that a new crew staff is on, we allow them to have those funds hit what's called our training and technical assistance line item because they're doing an awful lot of on-the-job training, and we know that impacts the overall job cost average. And then they're also doing not just on-site job training, but they have some required trainings and that they have to do sort of more book learning, so to speak. But so we do actually do a lot of that, and we have that built into our program, which is really strong.
Great. I see Senator McDonald has a question. Sorry, Senator McCormick, pardon me. You're muted, Senator McCormick.
Thank you. First, an apology. There's information I'm asking for here that probably has already been said and is probably in the report. I just want to, in my defense, remind you I'm new here. I've been away from this committee. Okay. First of all, what percentage of the costs of weatherization do we envision being paid by the homeowner or by private organizations, and what percentage is paid by the state?
So for the low-income weatherization program, we do weatherization at no cost.
We do.
Yeah. For landlords, for a multifamily property where the tenant's income qualify, and so the property qualifies, unless the landlord is also income eligible, which does happen, but unless they're income eligible, the landlord's responsible for any of the health and safety aspects of weatherization. So that's the one sort of distinction. And so in that sense, you could say that weatherization actually leverages a whole lot of just general improvement in our affordable housing stock across the state of Vermont.
And then the figure of 80,000, is that how many households there are in Vermont, or how many are in need of weatherization?
I think that the number 80,000, and again, I'd have to go back and look at the work we did to come up with that number, but I think what we did is we tried to, it's a tough question to answer how many homes are left to weatherize, right? That's actually a tough question to answer. And so I think what we did is we tried to triangulate, and we used a few different data sources to come up with a number to say, here's how many homes we think are left in the marketplace that would be eligible for the low-income home weatherization program. And so that's sort of the field of, like, we have that many more homes that we could be weatherizing. And we used a few.
And that's 80,000? And that's 80,000?
Yeah, I think so. I mean, again, I'll have to go back and sort of dust off how that report and how we got there, but I think that's where that number is coming from. We looked at a few different data sources, including using information from tax department. None of them give us exactly the right answer to the question, but when we looked at 3 different data sources, they all kind of pointed to a similar number, and so that's kind of where that number came from.
Okay, thank you.
Thank you. I'm noticing the time is 10:30, and I know you have a hard stop. So thanks for jumping in. It's like skip rope. It's like, we had a 30-minute loop here, and you jumped right in. So thanks for giving us some more information. And if you have a chance in the coming week to take a look at some of the data behind some of the questions we discussed and can get back to us, would appreciate it. Look forward to working with your group again this year and getting even more done and in the coming 2 years and beyond. So
Excellent.
Thank you very much, Ms. Phillips. All right.
Yeah, thank you.
So Jude is here. Let me double check. We actually were originally scheduled to go longer, not knowing that Ms. Phillips had a hard stop at 10:30. So we're trying to bring Commissioner Walk in sooner than 11. Jude, do you know if Mr. Walk, if Peter can come at 10:45?
I relayed that message to him that we'd like him at 10:45. He hasn't responded, but I think he's watching online, so he may. I'll text him again.
Okay, so please do. So we didn't really take any break this morning. I apologize, but it's not always easy to match everyone's schedule. So let's take an actual break. 10:45 we'll reconvene.
Yeah,
hopefully,
Peter's.
Mr. Walk can join us then, and then we will hear about the administration's proposal and have some committee discussion to follow. So
Peter's good for 10:45, and actually he's here now. So
okay. So thank you all. See you 10:45.
So, Mr. Chair.
Yes, sir.
I know we're taking a break, but when we're talking about weatherizing more, are we doing this to achieve a goal, or is this before us because there's a general concern that we ought to do something and we've started with a dollar amount, and we're going to decide how to best spend that dollar amount? Or are we looking at what we want to achieve at the end of this operation? And I'm trying to understand that,
Sure.
So, when we get back, maybe we'll find out what we're seeking to accomplish over 2 years. Is it a launching pad or an experiment? So
I want to support Mark's question. I'm not sure what we're trying to, I want to do more, but within this, my number one goal is to reduce carbon, and I want to know how we're going to do that, and what's our goal.
Okay. So we'll revisit that, and there are some statutory goals. There's, so I'll save it for when we're all back together again. But there's statutory goals. The CEP has goals. The EAN report, Pathway to Paris, lays out some goals. So there's a number of them. They're all much more ambitious than our current pace.
And how they compare to the proposal that we expect to get, we think we're listening to.
Right. So when we come back with Mr. Walk, he's talking about, I would say, like the governor's contribution to this overall larger effort. Again, I think it's going to take multiple funding streams in order to bring up the whole level up.
Okay. Well, yes, of course. It may take 6 different directions, and we may see which ones work and then pile on to the ones that work, but we'll find that out. But what's our Are we looking at
Sure.
a 2-year window until the next election, or are we looking at achieving a climate goal by a time certain or sooner? Yeah.
Okay, so obviously we should discuss this more. I would say the shortest answer of all is that the bill is constructed around, that will be in committee next week, is constructed around a goal of 120,000 homes, additional homes on top of the 30,000 we've done in the next decade. That is, a reset on the goal. Pushes it higher and puts an end date on it. So,
Okay, I'm looking forward to thank you for helping to put that into a perspective. Thank you, Senator Westman, for your
moral support.
yeah. Thank you.
Okay, I totally agree. We need to know what the goal is.
Yes.
And thank you, Mr. Chairman, for the 8-minute break we're taking.
Hello, Commissioner Walk. Thanks for coming in.
Good morning, Mr. Chair.
I'm going to enter the brave new world of Zoom, try to do a screen share when we come back to answer a question. My actual mileage may vary. We'll see how this goes. So, Jude.
Yes.
I think I see the green screen share button on the bottom of my screen. So I'm guessing that means I'm enabled to share a screen. Is that correct?
You are co-host, but what I would advise you, the document you want to share, open it and minimize it so that when you're ready to share, you put that up first and then hit the green button.
Okay, so I have one document open.
Okay, that's fine. If you're going to do it right now, that you can just leave it open. Hit screen share.
And I see the window.
And then share. And we can see your document. Good luck. Great.
Okay. So thank you. So we're going to come back and talk with Commissioner Walk about the proposal the governor just laid out in his budget. But this question has come up quite a bit today. So I wanted to pause and go back to the source of the 80,000 number. As best I know, this is the only place I've actually seen it, and it's in Title 10, and it's our building energy efficiency goals in the air pollution control chapter, and I believe it dates to so I was going to say it's 12 years old. It was added in 2007, so it's year 13. And you can see the other goals laid out in there, reducing fuel needs, reducing the expense for families. And so I'll just put that up so that people know where the number comes from. As I mentioned, there were some other numbers mentioned. The Comprehensive Energy Plan talks about weatherization, amongst others. The Comprehensive Energy Plan talks about weatherization. Also, the EAN report, which has a chart we looked at with Jared just recently that has a whole variety of measures, all of which together, quote unquote, are a path to Paris. So it's like everything on there we would need to do in order to meet the Paris climate target goals. So you'll see a different number for weatherizations in there. And with that, now I'd like to stop sharing, and I see a button for that. And are we back to normal? Okay, phew, made it. With that, good morning, Commissioner Walk. Thanks for coming in. The governor had news of interest to all of us in his budget address, and we'd love to learn more.
Thank you. For the record, Peter Walk, Commissioner of the Department of Environmental Conservation. I appreciate the opportunity to frankly discuss with you. I listened to the tail end of Bob Barton's testimony and to Sarah Phillips' testimony as well, and understand that there's a robust conversation to be had, and I'm happy to do that with you. But wanted to provide an opportunity just to go straight into sort of what the governor has proposed for your consideration and questions, and then part of the larger conversation that you're having around what is the goal, how are we going to get there, all of those. Fully understand what that is. So, as you're all well aware, there was, because primarily of sort of moving different things to CARES Act funding and be able to do different things, there is a significant amount of one-time money available in the FY22 budget. So the governor asked some of us, Sarah Phillips and others included, to come up with a proposal to develop, to invest $25 million of that surplus in weatherization programs. So we if there were a smaller amount of money, we probably would have considered simply augmenting Sarah's programs in OEO to get to the lowest income Vermonters and help them make weatherization happen. Obviously, as Sarah told you, it's not possible to ramp up from their current $10 to $11 million to 36 in 1 year. So we started going broader and understood that there was a significant conversation going on as part of the EAN summit around sort of developing a larger proposal around weatherization, something, Senator Bray, that you've been involved with. Trying to understand sort of what creativity there's out there, what opportunities there are to create more opportunity. There have been existing programs that have worked to use state dollars to make private financing more attractive. That first was run directly from the Public Service Department and has been run through Efficiency Vermont. There are a number of things out there. We sort of wanted to build on that, as I think the Act 62 report called it, sort of the ecosystem of weatherization work that's out there. So we propose, and then the other piece, which I think is that I'm really excited about, and we've been working on, that primarily BGS, but other partners in state government who have been partners in that. And then, as my role as a board member of the Vermont Low Income Trust for Electricity, VLIGHT, have looked into how to support municipal buildings and the work that's needed to be done there to address weatherization and energy efficiency work generally. And so there's been you in the legislature funded and authorized the State Energy Management Program, which essentially was a concept of using loans from through VGS to pay for energy efficiency work by state agencies, and then that would be paid back over time from those energy savings. It's been a very successful program. We've done really amazing things. Primarily, give you an example of our fish hatcheries within the Agency of Natural Resources, both changing out the equipment that we use, but also installing renewable energy to help take the burden off of the grid and to make our systems more efficient and more affordable. And that's really been an incredible boon to state government to really be able to put its money where its mouth is and lead by example. So the three pots of money that the governor's budget proposes to add resources to are, one is existing and two are sort of either new or an expansion of an existing program. So the first one is, as Sarah mentioned, an increase over 2 years of $4 million into the Weatherization Assistance Program. As she mentioned, they need time to ramp up to that dollar figure, and so that's what they thought they could spend. That is a one-for-one sort of state dollar to project-based process, since as she described, the state covers the cost of weatherization, and so we're getting one weatherization for every dollar of that sort of ratio. The second piece, and you've heard pieces of it from Neil and from Maura Collins and from Bob Barton and others, around the idea of how do we, so there is X amount of weatherization that needs to happen. And I understand there's a robust conversation around what that goal is and what the ultimate sort of overall cost of that work would be. And then there's, different ways to get that work done. Some of that may be, state dollars. Some of that may be people investing in saving money in their own homes, but we need to give better tools and lower cost tools to make those savings possible. And so that second bucket is really sort of using the power of the Housing Finance Agency to really make our money go further, right? Make our state dollars go further, make access to that capital more attractive to Vermonters so that they can help get projects done. There's been great work in that space already with, as I mentioned, the program that the Public Service Department started and the Efficiency Vermont's been doing to make loans available at lower than market rate costs and to help the sort of provide loan guarantees for the banks to be able to take to more aggressive positions and to get money out the door. And that's what we're trying to accomplish. We're trying to accomplish getting more dollars out there and more projects on the ground to get that work done. And so I'm really excited about where that is. It creates a sort of a pipeline for not only these dollars, but other future investment as well. As we think about what that ecosystem looks like, there's this sort of elephant in the room that we haven't really talked about or haven't heard you all talk about yet, but there's significant interest at the federal level in ramping up the spending on weatherization and similar programs. And that's an opportunity for us to create that pipeline and then feed the any additional federal money through that as well. So there's some great opportunities across the board that really open up the doors when we think about that type of program. And then the final one is the expansion of the SEMP program and the State Energy Management Program and making municipalities eligible for it. And putting $5 million in that program to essentially be a revolving loan fund. And the brilliant part about the work that BGS has done is not just make money available, because money doesn't solve the problem here. It's the expertise and the project management skills in order to be able to move those projects forward that really matter. And that's the expertise the BGS has developed. And that's where their value add for communities. And so that's really an exciting process and something that there hasn't been state dollars for yet. V-Light made an investment in helping BGS launch that program with the expectation that the state would likely get involved. And this, I think, is a great opportunity for the state to start that process. So those are the three buckets. I just wanted to sort of provide some clarity around that, provided you with the sort of the white paper kind of laying those things out. But I just wanted to make that sort of available and sort of answer questions that you might have on the actual proposal as you're thinking about the broader ecosystem and understanding that this is a one-time investment. This is not an ongoing, this is not a setting of a clear target and actually developing solutions to get there. It's hey, we have some more money available to us in this year. What do we want to do with it and what are our priorities? And weatherization is one of those priorities for the government.
Right. Thank you. It's helpful to hear the pieces laid out. And we have a handout from you, I think on our website. Is that correct? I think I saw that earlier. You gave Jude something, correct?
Correct.
Yes, that's what I thought. Okay, so for people watching, they can find Commissioner Walk's handout on the website. Can you remind the committee about what V-Light is and what kind of money they've put into the BGS energy efficiency program so far?
Sure. V-Light is a nonprofit organization that was created as part of the CBPS GMP merger that has seats on the Velco board and gets essentially revenue from being part owner of Velco, essentially to provide assistance to Vermonters and Vermont organizations in support of the comprehensive energy plan. So it's obviously it's focused on low income solutions and really trying to understand how do we drive solutions to Vermonters who struggle to access the programs that are available now. I did also want to mention that we're also, sort of as a state ecosystem overall, we think about, we obviously have different programs that reach different subsets of Vermonters that all kind of fit together, and sometimes they fit together well, and sometimes there's confusing overlap. That's unfortunately the nature of programs. But there has been a lot of work done by the efficiency utilities to really target what I consider one of the hardest areas to meet, which is that low to moderate income space where they might not qualify or be prioritized under the current low income weatherization program, up to about 120% of the area median income. That really, when they do take on projects, they're often not the sort of complete project that's necessary to be able to really leverage savings and to hit the carbon savings we want on all those things. So I really think that they have stepped up and offered a greater incentive in that space, and coupled with the idea of making financing more available, that really has a great opportunity to create more projects there, better projects there. So,
do you know what kind of revenues flow out of the V-Light fund each year? What?
It's roughly $1 million.
Right. Okay. Thank you. So I'm just looking up to see if there are committee questions. Senator Westman, do you have one?
Do you speak, Peter, about what the goals behind this are for the administration?
Sure. The goal is to is to recognize that we have longer term targets out in the distance that we're trying to get to. And
what target?
Frankly, I think the difference between 80 and 120,000, as you were discussing earlier, is sort of irrelevant in the moment. If directionally, we just need to, like, this is about oomph and direction. At this point, I'm happy to engage in the long-term discussion about the target, but we're so far away from that target that it is almost irrelevant at this point.
So the proposal
Senator
is irrelevant, or the
whether you select one large target that's out in the distance or another, the proposal that we're making helps us get there, helps us get closer to that thing. We're very clear that this is a one-time investment. This is the ability to squirrel away some of our dollars into this work. It is not going to get us there entirely.
And I'm Mr. Chair, I'm not.
Yes, please.
Governors come and go, and I'm not being disrespectful, but what we have been doing is not tackling this problem as we've kind of done piecemeal, and I compliment the witness for saying that that the target is sort of irrelevant, because that's sort of the business as usual that we have been engaged in since we established our goals. And I'm maybe I'm become a doddering old fool that I ask myself, do the goals mean anything? Is this just, we put the goals out there to make people feel good, and then we come up with plans that kind of and treat those goals as being irrelevant? So I'm aghast that we are once again taking that posture. And while I'm at it, all these discussions have been sprinkled with the term low income, low income, low income, low income. It's one thing to target people with low income and try and give them a hand. But the goal here is a goal irrelevant of people's incomes. It is to target fossil fuels and reduce, eliminate, and halt their uses. And I don't understand why we are not targeting that where the waste is the greatest and where the progress can be most useful, whether it's low income or high income fuel wasters.
Sure. I would like the opportunity to first clarify my statement about the irrelevance of which goal you select. Is that what there are multiple goals that we can choose. The one that's most important for me from a climate perspective is, as Senator Westman referenced, what do we need to hit in terms of meeting our climate goals? And that, frankly, that is the work that the Climate Council is working on right now, is to think about how do we actually, what levers do we pull in order to get to various things? Because you could do, if we completely electrified the motor vehicle fleet by 2030, right, as an example, obviously not likely to occur, but then we would need to do less to meet goals in the building stock. And so understanding what levers you pull matters, right, in terms of setting those targets. So that you've asked that council to do that work, and that is ongoing, and the state agencies are supporting that. So I just want to be a little bit clear about what I was trying to do. I wasn't trying to be flippant about the fact that
No, not at all. You've never been flippant. And Mr. Chair, I'm going to wrap up. We, the legislature, are the pullers of levers. That's what we do. We either pull the lever or we don't. We are the ones that pull the lever. And if those people who understand our challenge don't give us some levers to pull, and don't recommend levers to pull that don't get to solve the problem, how are you going to get us to actually do it? We're always afraid of pulling levers, and we'd like a little help in what levers need to be pulled to reach our goals. And if we are weak-kneed, we'll fail to do it. But the people that advise us ought to be telling us what we need to do to reach our goals. And if we're incompetent to pull those levers, then that's on us. Why we constantly get our knees knocked out from beneath us, and we're told to not worry about the overall goals, just take a small step this year. So that's my speech, and I'm frustrated.
I understand. Let me answer your other question about why we're focused on low and moderate income Vermonters. Because those Vermonters who can afford to make those changes can see the economic value in weatherization on their own, and they can afford to take on those projects. There are incentives available right now for all Vermonters. There is no distinction there. Whether or not you want to increase those or create more targeted programs for everybody, that is your decision. I'm just saying where we're focused is on that group of Vermonters that simply won't move forward with projects or adequate projects to save the money, to save carbon, to use less fuel, all of those things without state intervention. That is what the world in which we are talking about and why we're talking about them. So I just want to make that distinction, that from a greenhouse gas perspective, yes, everybody needs everybody in all income brackets needs to take part in weatherization. It's a no-brainer, but there's different strata in terms of whether there's state cost share components to it in some way that are helpful to make those projects possible.
Senator Westman.
So my question in reducing greenhouse gases, and since we moved in that direction, is transportation is the largest producer. And we know that low-income people are stymied to be able to move to more efficient vehicles or do anything. And there is no component of this that tries to kickstart moving low-income people into efficient vehicles. And why would you, what would be your answer to that? Why should we choose to just look at weatherization and not begin to work on transportation?
So the short answer is you shouldn't, and you aren't. So the proposal that we are talking about immediately right now is a weatherization. There's a different proposal that invests additional resources in straight electric vehicle incentives, in the replace your ride program that's being developed, which essentially is sort of cash for clunkers for more efficient vehicles. There's you put resources in through Capstone to develop a program to help people get in more efficient vehicles. All told, I think Senator Westman, you worked on that when you were in the transportation committee, it might have been after you left. But there are different resources available for that, and certainly something we are very focused on, because you're right, it is 44% of our emissions currently.
Yeah, we're talking weatherization now, but as I've been clear, apparently not clear enough, that we're doing stuff in a sequence, but we fully acknowledge that transportation is the largest emitter, and that one of the things, Senator Westman, you and I have just spoken, and Senator Campion has brought it up in prior meetings about doing more work in partnership with Senate Transportation, because we know there's a shared interest there and some shared goals. So I would completely agree with the commissioner saying we're doing both. As a state, we're doing both. In this committee at the moment, we're focused on weatherization, but keenly aware that we have work to do in transportation. I need to do a screen share again and put up the picture, the slide. I don't know why I don't see what you see. Can you see the slide from the EAN presentation now?
Yes.
Yeah. So two things. So we just went through this with Mr. Duval, like, I don't know, 2 weeks ago. And that middle block is all related. We've also done tier 3 work, and we said all these measures like heat pumps, advanced wood heat, and heat pump water heaters. When we do that kind of work, we also want to do weatherization. So the weatherization isn't called out sort of by name there, but if you see the column labeled 90,000 additional retrofits. So I think that's what they're using as a term for weatherization, amongst other things. And then if you go all the way to the right, there's a dotted line column, other reductions, and generally that's captures efficiency. So we've talked about, and Paul Zabriskie said it well yesterday, conservation first. We're always trying to be focused on efficiency first to reduce demand outright. And weatherization goes directly at reducing demand outright. The complementary measures like having heat pumps or advanced wood heat or a cold climate heater, water heater, fit in with it, but it's, we're not going to stop doing one to do the other. And then tier 3 back in the RES says we don't want to be taking measures to put cold climate heat pumps in homes that haven't been weatherized. We don't want to just more efficiently heat the great outdoors. So we do have, our conversations have been focused on weatherization, but I agree with the committee. There's other work to be done. And it's just sort of a limitation of the committee process that we're focused first on weatherization, knowing that I hope in the second half of this session, in partnership with transportation, that we'll make meaningful progress there as well. And as you've pointed out, Senator Westman, and Commissioner Walk, Senator McDonald, people buy cars and they keep them for 9, 10, 11 years. So we're also talking about, there's a lot of momentum built into the system. We need to be making a transition because we're going to live with these vehicles for years to come. So I'm sympathetic to everyone's misery. We have a lot to do
I would
on more than one front.
I would just say that I understand that we have started and taken, in my view, little steps on the transportation side. This is a one-time infusion of some money, and you made a choice to put it in this area. And I'm trying to understand why you decided to put it all here and not try to kickstart some of those functions that are going on in places like OEO and the CAP agencies in their work to try to kickstart some of the things in transportation instead.
Sure. Well, ultimately, I can't. The governor speaks to sort of what his prioritizations are in terms of how he proposed to you to divide up those resources. Obviously, that's the start. The governor's proposed budget is the start of a conversation with you, and fully understand that there are lots of different priorities. When we look at the various numbers of goals that are out there. Weatherization is not a new concept. We know that it pays economic benefit in the long run. We know that it has significant greenhouse gas emission benefit, makes the transition to different fuel types and different heating systems easier because you have to do less. As the chair said, sort of we're not heating the outdoors anymore. Those are all things that happen, but we haven't gotten the momentum that we need to make progress there. In terms of the transportation world is on a slightly different path in my mind. The market is going more and more towards more efficient and electric vehicles, and we are trying to drive that quicker than the market would normally go, but that's where the market is going. And so that one is it's not easier, right? Because we're all still individual sources of those emissions, but it has a different set of inertia and momentum than the weatherization world does. So that would be my logic. I'm not saying that they couldn't be reallocated in different ways if you so choose, and they wouldn't be money's well spent. I just wanted to sort of frame that from my perspective. And that being said, I've spent a lot of time working on trying to figure out ways to reduce emissions from the transportation sector, and I'm very keen on finding solutions there. So,
well, while we're talking about transportation, let's just take a little detour and talk about TCI. Can you give us a sort of a best case scenario for how it might work for Vermont and how soon versus what are the things that are keeping us in kind of a wait and I don't mean this in any way disrespectfully, but because I know there's things going on, but I would say like a wait and see posture. What's going on to help us perhaps get there sooner or later if we're going there?
Sure. As when the announcement was made in December, the governor was part of a large group of states that are continuing to work on the details of the program with those states and the District of Columbia that have determined that they are ready to move forward. We have one of the lead drafters of the model rule development process. So everybody agrees to a certain set of standards that we then put through rulemaking to operate the program in each of our states. So we're involved in all of the details, right? And sort of the development of that. That's important for us to know what those are going to look like. So as additional decision making occurs as to whether or not the state participates in TCI, that we're not coming to it cold. We haven't been involved in the development, et cetera. So that's sort of the promising feature of where we are. From a timeline perspective, the proposal is to begin actual regulation of emissions on as close as possible to January 1, 2023. And with the idea that there may be an opportunity in sort of the second half of 2022 to be able to hold futures auctions, for lack of a better concept, essentially sort of letting the auction work a little bit in advance and be able to generate some revenue and have those who have compliance obligations kind of understand what the market is likely to look like. That goes along with a reporting only or information gathering phase that would start in January 1, 2022. So that's kind of where we are from a TCI perspective. I understand you've had some testimony relative to Act 6200 already, but that's in a nutshell kind of where things stand.
Okay, thank you. Yeah, the Act 62 touched briefly on transportation, but the focus of our conversation, along with this bill development work, was on mostly weatherization. So we've talked about, I think it's clear in the room that we know we need to be doing more on a larger scale. And one question, so I just want to put it on the table. I think we'll certainly want to ask you to come back in and talk to us when you've had a chance to think about it some more. But I'll just say a concern I have from sort of a program design point of view is if when we continue to raise different sorts of revenues, like that we have fuel taxes, excise taxes, maybe the PUC proposed a thermal energy benefit charge. There's a variety. We're talking about money going to bonding. Bob Barton had a bunch of interesting proposals. My hope is that we end up with more irons in the fire, generating more revenue, and they're going to arrive where is kind of my question. So what funnel do we create that captures those revenues and then thinks rationally about how do they get allocated out to that ecosystem that lives a layer below? So there's kind of a receipts of money, an allocation question, and then because we're dealing with ratepayer or taxpayer dollars, and we all have administration and legislature alike have a fiduciary responsibility on performance, how do we evaluate the success of those programs and then continue to improve the operation of that overall ecosystem? Have you given, and so I'll just put one thought on the table is we do a similar thing. I don't know if it's apt or not, but for our efficiency programs, people go to the PUC to get approval of a budget, and the department feeds in analysis to help them approve budgets. I don't know if you've thought about this, if we succeed in growing our overall effort, how we're going to manage that successfully, as opposed to just doing individual pieces, sort of appropriation by appropriation, which sounds like by the time we, for instance, double and double again a program, we'll have a lot going on, and it would seem irresponsible for us not to figure out how to manage it.
Sure, I think you have sort of four buckets of work. There's the sort of where that money goes, or who is deciding where that money goes, right? There's different options there, as you said, either PUC or a normal appropriations process, whatever that looks like. There's the who's managing whether or not we can grow that money and make more available. And I think that's what I like about BHFA performing some of that role and potentially even being in the first role. And then you have the sort of development of the workforce around the ability to do more weatherization. And there are lots of different pieces of that. There's, as Sarah described, there's the community action agencies associated with that work. There is additional workforce development training that needs to be made available, et cetera, to grow that workforce. And then you have your sort of service delivery, actual weatherization projects on the ground. And I think that is where we have the strongest ecosystem right now, and that exists, right? We have the contractors that the efficiency utilities work with directly to be able to get that work done. We have great partners like NeighborWorks in Western Vermont and the 3 Thermal and all of those sort of organizations out there that are ready to deliver projects, right? That is, and going away from that model doesn't make a ton of sense. We have that delivery piece out there. And if we're going to scale, then we've got to have both the resources to do it and the people to do it. But the sort of the contact with customers and with the ability to deliver those services, I think exists in my mind fairly confidently. And so that's the place of strength from my perspective.
Okay. Well, thanks. I mean, I think it's something I know we'll come back to it. And by way of reassurance, I'm very much not interested in creating much in the way of, bureaucratic infrastructure, as light and as little and as nimble as possible. But I do sense that it's part of our job to have that perspective on how we're handling money, how we're making allocation decisions, and what kind of performance we're seeing out of the programs that live underneath those allocations. Senator McCormick, do you have a question? Okay. So I'm going to switch gears a little bit if you're game. Mr. Coda was in and was talking about, rationalizing maybe the fees associated with liquid fuel use. And one of the things he was talking about was renewable liquid fuels. So we all realized we had a fair amount to learn. Someone just sent me a paper this morning that shows that ethanol may be actually much more efficient these days than we all think, the newest processes. At any rate, does your area, are you working on a renewable fuels sort of standard, something people have talked about creating a clean heat program for Vermont that would, if we were to have charges related to carbon content in different fuel types, Mr. Coda's proposal would be to exempt renewable fuels, or to the extent that they're composed of renewable fuels in a case of a blend. And this is one of those where the details really count, and measuring the full embedded energies in those fuels, including the growing of a product and harvesting, processing, shipping, et cetera. Is this something the department is already at work on, or this would be new work, or can you fill us in a little there?
Sure, I would say that's, sort of falls outside of our purview generally. Those conversations typically happen at the Department of Public Service around those types of standards. But certainly there are a number of associated, considerations as you think about how to evaluate, what fuels to consider, what components thereof. This gets very heavily into the sort of what are you counting and why, and what do you care about? Because nothing comes free, right? There are different costs associated with different actions. There's a lot of land use considerations, usually outside of the state of Vermont, around the production of biofuels at present. There are, so it sort of gets into that life cycle. And do you only care about carbon, or are there other environmental and societal things that you're interested in to move forward? I will say that as one way of thinking about it is as TCI was under development, the states decided to only count in terms of a regulatory oversight, that portion of the fuels that was non-renewable. So the portion that was directly extracted from the ground, rather than either the ethanol component of gasoline and the renewable portion of on-road diesel. So that's where that landed. It's not a complete answer to the question, but it is something, to the place where that group of states landed.
Okay. All right, that's helpful. And I think part of the reason I was asking you is because of your work on air quality and the associated emissions with any fuel type. Okay.
Sure.
Great.
So I mean, as I said, it gets into what are you measuring and what do you care about? The burning of any fuel has associated emissions, but if it's developed from biogenic means that where we've sequestered that carbon in a plant stock and then created fuel out of it, it's a sort of a different calculation than one where we're just burning existing fossil fuels. So
yep.
That there's a factor there. There's also other things in those emissions beyond just greenhouse gases in terms of other pollutants.
Okay. Well, thanks for coming in to fill us in on the governor's proposal and a little bit extra while you're in the room with us. Any questions for Commissioner Walk before we wrap up for the morning? Okay. So thank you very much for joining us. We'll stay in touch. There's more to do here. And now before we adjourn, I just wanted to touch base with the committee on the balance of the week. So we have more testimony related to this bill, but also we're going to be coming back to the executive order related to the Natural Resources Board tomorrow. We discussed it yesterday, I think it was, to hear from a few more witnesses, including a witness who may be in support of the changes. So we've done some outreach. I'm not sure that we're quite there yet for everyone, but the other thing that came up was, although it's beyond our responsibility, we do want to know what the cost is of the proposed change. And there's also some impact in terms of if the program were to be stood up with one-time money, what are the ongoing costs of running the program in a different way, so that we'll just be aware of the budget, even if it's not our bailiwick to be doing the appropriations necessary to maintain that program. And that will be tomorrow, and then we'll have finished there. And unless anyone has any more burning questions on the EO, I think that would complete our testimony, focused primarily on the merits of the proposal. And if there's anyone want to chip in anything, any questions, Senator McCormick.
Thanks, Mr. Chairman. In anticipation of tomorrow's testimony and the ongoing examination of that, I would hope we would, and I think probably the committee doesn't need me to remind them, I will feel better just saying it, that we need to always keep in mind the question of the level of scrutiny of under the 10 environmental criteria of Act 250, that we make sure that we're either getting better scrutiny or at the very least as good. And the second thing is the level of access by Vermonters, that any change in the process not have the effect of favoring the rich and powerful and cutting mom and pop out. So, thanks.
Okay. Well, I think those are shared goals, and it's good to hear them articulated out loud. So,
thank you.
All right. If there's no further business, then we are finished for today and we are adjourned. Thank you, everyone.